It's me Pavitran here. Today we're going to discuss crude oil forecast of how crude is going to behave in a coming week and what are the levels we should be watching out for. Before that, as usual, a quick recap of previous week and how the price has been reacting to that. It was a nice start to the week. As usual, I was expecting some kind of a range bound moves, and pretty much the range will be intact with 42 and at the level best to 36. So it has been reacting to that range, and the tighter range which I have given is 42 and 39. So it's a $3 range. Another one is a range of $6, somewhere near to that. Let's see. This was an opening on Monday. That's 20th of October, and as you can see over there, it was a little slight open on a positive note, not a big one, but on a little positive side it had opened. And after that, you can see I tried level base to go near 42, and as you can see, a big wick that had came, and after that, this was the big wick. Let me zoom it in. This is a big wick which you can see in this level from 4160 to somewhere near to 4185. After that, you can see a kind of a bearish army, and followed by a big fall over there. And after that, market can't able to break that 42. So the 42 level is still intact, and we haven't seen any kind of big moves breaking 42. And as usual, the same level is being intact. So last week I clearly mentioned that you can take a short position in any of the place. This is a kind of an supply zone. If you have taken a position, say or here or here or even here, seeing this red candle or even seeing red candle, this should be a stop loss. So here, if you have taken a position, here you have taken a position, even if you have taken a position here on seeing this rejection, so your stop loss is 42. So what we have to do after initiating the position is we have a targets, and the first target is the first demand zone over here, that green zone, 39 to 35. While coming to the booking profits, it's up to you, and how your trading style, and whether you're going to book your profits all your lots, or you're going to split it into 50-50, booking your 50 in the first target and booking the second, waiting for it to break to the second zone. We don't know whether it is going to break this zone, the levels which we have mentioned. And as I said, for the previous month, so nearly 25 days or 20 days, this range has been maintained pretty much the same, from 39 to 42. As you can see, it started here, it came again down, it tested here, came again down, it again tested, it came down, it's tested again, and it's coming down. Now it's in range, so we exactly don't know when it's going to break, when it's going to stay in a range bound move. What we clearly know is that until this range bound moves is there, or until this range is there, 42 and 39, we know for sure that it's going to be a range bound move. It's better to take a position whenever the price tries to hit the ceiling, and it will come down to the roof, and whenever price hits the roof, and you have to aim for the ceiling. So you can play in this range. When the ranges gets clearly broken, then no problem, we can aim for another range. So consider this range has been broken. Now this range will act as an resistance for some time being. So we don't know exactly when a target is going to be met. Like I said, if you have initiated the position here, your first half of the lots will be covered here, and the remaining lots will have to wait for this target, and price again goes back to your original cost. Now again you can short it, the same lots which you have shorted during this position, and it can also try to come here, and you can book the same half of the lots. So again price goes there. If you miss the position to short here, you can add on, then price again tries to come. So we don't know exactly what are or how much we are going to get out from the trade we are going to enter. What we clearly know is that stop loss and the probability of the trade, that is somewhere near to even consider this. If your probability of trade is 60%, and your risk reward is somewhere near to 1 is to 4, then what is there to worry? Your risk reward will always be helpful of you. Why? Because consider you have entered your stop loss somewhere around 70 cents, and you're booking a profits of nearly 1 is to 2 range or 1 is to 3 range. So the odds are in your favor. So try to think or have this kind of a mindset before entering a trade. When you're having odds on in your favor, then you can end the month in a green rather than losing big amounts. You can spend a nice time monthly basis by just sticking to the levels which has been provided here. It's not a rocket science, and just a simple origin of the rally story. The same thing I have been explaining for the past 2 to 3 months. Find a rally, mark that zone. Whenever price comes near to the zone, just play with the small stop loss and aim for the another zone or another big resistance which is above or any recent ones or a swing highs or swing lows, whatever concept you are going to do. Just be with the ratios of somewhere 1 is to 2 or 1 is to 3. uh, Still now the range is same, and from the last week I have been saying the same, or maybe for the last 2 weeks I have been saying the same. From the last 3 weeks also the range has been very much clear. So the bigger range is 36 and 42, and the tighter range is 39 and 42. So if 42 breaks, then we are heading for 43.50, that is the next resistance zone. If you are not breaking 42, then we are all set to play in a range bound. I'm pretty much sure that this week it's a kind of a not so much bullish or not so much bearish. It's pretty much neutral. We can't able to find any exact patterns, and if you want you can draw a trend line over here, and we even don't know how this is going to behave. So just it should not be accurate, or we don't know whether it's going to be behave perfectly in the way which we have drawn. It's just for a reference. So this is the region, or we can say this is a bullish one, bullish trend line, and it has been respecting them the top and the bottom, and once it gets broken off in this region, then you can see it has been given a retest also here, if you consider this as a retest. Nevertheless, this is a one pattern which I found, and it was been trading quite tightly in this region, and I'm not very sure of this because as I was expecting some kind of a big moves happening. Whenever big moves is not happening, then I won't be able to trade. For me, crude oil, it should move, it should have an insane volatility so that I can able to get into a trade either in a buy side or in a sell side. So if it's not moving, then there is no point of watching or waiting in the market to see the screen. So it's just a waste of time for me. Whenever it's trending, then you can take home a bulk amount of profits, and if it's in a range bound or if it's moving slowly, then the person who is having more patient enough to sit in the front of the screen and having to wait to reach the target, then they can make money. So I don't have that much patience, and this week is not for me, and I'm expecting some kind of a good moves trying to come in the coming week. And right now what we have is kind of an pattern which has been starting. Let's see if this line holds, or if this resistant line holds, or then if it breaks, then it can test another time here. If this holds, then we might able to see 39 to break. Other than that, 36 is still intact. So even if we break 36, then bigger support level will be coming around 35 and 34. It's a kind of an still a tight range, and we need either a volume to break above to sustain 43.5 for further highs, or we need to break 36 and a good volume to sustain below that. Until then, we don't have anything major in plain crude oil. Just focus on the levels which I have given, and then play with the ranges, and have this thing in mind. Small stop loss and big profits you should always focus on. Thank you.